Feeling lost with the current economic chaos, gold is exploding and the market is sending us signals that most of investors are missing. That's why I'm breaking down 6 critical reasons for this surge you will not find anywhere else. In addition to providing you price predictions for gold according to huge financial institutions, are you ready to strike it rich in 21st century? The gold rush of 2025 is being fueled by a perfect storm of factors that are sending shockwaves through the global economy. So what's driving this gold fever today? Let's break it down. Reason number 1, geopolitical and geoeconomic uncertainties. It's represented in ongoing tensions and economic instability that create a demand for safe haven assets. So what are geopolitical uncertainties that our world faces these days? Basically, they are big situations happening around the world involving countries and how they interact. Right now, there are a lot of things creating uncertainties. First up, we have got ongoing conflicts in different places like the Middle East and Europe. Now you may be thinking that's happening far away, but actually these conflicts have a ripple effect. Think about it a little bit. They can mess with things like how much we pay for gas and even the price of food in grocery stores. That's because these regions are key players in energy production and agriculture. Next, we are seeing increasing competition between some of the biggest players on the world stage, especially the United States and China. It's something like two big players in the playground. Sometimes their disagreements can make anyone else a little nervous about what might be happening. This competition can lead to tension and the potential for things to escalate. What are the economics challenges is that the world is dealing with today? I want you to imagine that the world is like one big team, trading and sharing, and that world is splitting to smaller rival groups, and these groups are making their rules for buying and selling stuff. The splitting up messes things up. It makes it harder to get the product we need because things get stuck at borders. It also makes stuff more expensive because countries are putting up trade walls. As a result of that, the world economy is becoming less connected and more divided. And absolutely, that can cause a problems for everyone. Also, I want you to imagine a game of puzzle where each piece is a product we use every day. These pieces are made all over the world and need to fit together to reach us. But I want you to ask yourself a question. But what if some of these pieces get lost or delayed? That called supply chain disruptions. It's like a factory can't get the stuff from another country. It cannot make things we want. And if these things don't reach our stores, we might not be able to buy them or might cost more. Lots of things can cause disruptions, such as wars, natural disasters, even pandemics, can mess up how things are made and shaped. This creates uncertainty in economy. Right now, many countries face a tough economic situation. Prices of things like gas, food are really going up fast, which is called inflation. Also, there is a worry that economy can slow down and even can go to recession, which means business will struggle and people might lose their jobs. Also, you can add into consideration the competition for technological dominance. Reason number 2, inflation concerns. As we know that inflation decreases the purchasing power of fiat currencies, such as US dollar. Historically, gold's value has tended to hold up or even increase during periods of high inflation. The reason is gold is tangible asset with a limited supply, unlike fiat currencies, which can be printed. Therefore, investors see a gold as a way to protect their wealth from the effect of inflations by adding gold to their portfolios, and that demand drives the price of gold higher. Reason number 3, central banks buying gold. Think of central banks are financial guardians for their countries. They are holding different type of assets like other countries' money, such as US dollar, euros, but lately they have been loading up on something else, gold. We need to know why they do that. They don't want all their eggs in one basket. It's a safe haven in crazy times because of a lot of conflicts and the economy is uncertain. Gold tends to hold its value or even go up. It's like a financial security blanket. Central banks are buying gold to secure their country's wealth during tough time. Also, it's a timeless treasure, unlike paper money which can lose its value over time because hello inflation. Also, we need to know that some countries want more independence. Think of it like this: if you hold another country's money, you might be more tied to their decisions. That's why some countries want to rely less on one or two big currencies, and gold gives them more financial freedom. Reason number 4: weaker US dollar. Think of like US dollar is the main language for buying and selling gold worldwide. It's just a standard that everyone used to. Now I want you to imagine that the US dollar get weaker. That means for your euros, for example, can buy more US dollar than before. So when gold is priced in those now cheaper US dollars, it suddenly became cheaper for you to buy gold by your euros. Because it's cheaper, guess what happens? More people want to buy gold. That's increase the demand for gold. So weak dollar, cheaper gold for many, more people want to buy gold. Simple as that. Reason number 5: investor demand. Alright, you have seen price of something goes up, right? Well, think of it like this. Imagine tons of regular people like me and you suddenly want to buy it. Simply, that is increased demand from retail investors. But it doesn't stop here. Now picture of big players, the giant investment companies with a lot of money, also wanting to get in on the action. That's large investment firms jumping. When everyone wants to buy something, this creates a type of push upwards on the price. So more buyers, not enough sellers, price goes up. Last reason number 6: anticipation of lower interest rates. Think of it like this: when interest rates are higher, you can earn more money by keeping your money in a regular saving accounts or investing in certain bonds. So gold, which doesn't pay interest, might seem little less attractive. But if everyone expects that interest rate to go down soon, suddenly those saving accounts and bonds will not be paying as much. So investors start to looking for other places to put their money where it can hold its value. And guess what often looks pretty good in that situation? That's right, absolutely gold. When interest rates expected to fall, gold becoming a more appealing investment because it doesn't lose its value like cash might be. Look, when interest rates are low, that increased interest in buying gold before the rate cut create upward pressure on the price of gold. So the anticipation of lower interest rates coming soon can make gold more attractive to investors, potentially driving price up. Finally, what can be price prediction for gold by the end of 2025? So let's look at what some experts are forecasting for the end of 2025. Please note, these are just predictions and not guarantees. For moderate outcome, HSBC raised its average 2025 forecast to $3,015. For more bullish outlook, Goldman Sachs initially predicted $3,100 per ounce by the end of 2025, but recently raised forecast to $3,300 per ounce, mentioning central banks buying gold and ETFs inflows. They also suggest a potential $3,300 if geopolitical risks or US debt concerns increase. Also, Morgan Stanley suggests that price of gold could reach to $3,400 per ounce by the end of 2025. By the end of our today's video, let me know in the comment section below what are your thoughts on the future of gold. If you found this video is helpful, don't forget to like and subscribe for more incoming videos into the world of finance and investments. See you soon.